Let's talk about that and more with Aniruddha Sarkar, CIO and Portfolio Manager at Quest Investment Advisors. Aniruddha, been a while. Thanks so much for joining in. Happy New Year to you.
Yeah, hi Neeraj. Happy New Year to you and your team.
Thank you so much, Aniruddha. Now, Aniruddha, it's believed to be a tale of two halves, a challenging year, very stock specific, all of that. Is your view the same, or is there a nuance to it?
No, I think obviously, you can't have a repeat of what we had the last year, because I think the last year, though the headline index was up around 8-9%, you had the small cap and mid cap index outperforming. But if I just look beyond the index, I think you had some supernormal returns from different companies across industries. So I think definitely this year will not be a repeat of the last year with regard to those kind of returns. But having said that, I would not be in the camp which would be very, very cautious, because I think most of the headwinds are behind us. And where we stand today, I think there's a high possibility of earnings upgrades happening from 4 to 6 months from now. Simple reason, if I go 4 months from now, we'll be talking about the first quarter of FY26. And I think first quarter of FY26, you have the base effect coming into picture of this year. Second quarter of next financial year definitely will be much better, because this second quarter was extremely bad. So I think 4 6 months from now you will see a lot of earnings upgrades happening also. So I'm not too concerned about the market, but yes, it won't be as good as the last year.
Aniruddha, hi, good morning.
Hi Tamanna, good morning.
Yeah, great to speak with you. I'm just wondering whether you are as I don't want to use the word negative, but as circumspect on corporate earnings and corporate performance as the street seems to be right now. Do you see as maybe some positive surprises coming in from the Q3 pack, or you've pretty much accounted for another poor quarter?
No, I think definitely the third quarter will be much better than what we saw the last quarter, because I think the last quarter was complete. You can say it was an absolute the washout across different industries. But in this quarter, I think you'll see some positive signs, especially companies which are facing the Indian consumers. Like you'll find, if you look at the business update which has come from different consumer companies, I think definitely it shows that it's better than the last year. You will have some pockets like the capital goods, which will again report good set of numbers. So typically, I would say what happens in an election year is a couple of months before election, couple of months after election, you find all the infra activity extremely slow, because of all the postponements which happen with regard to the approvals because of the code of conduct. I think the first quarter and the second quarter of the last year, of this year, was in the midst of the election. So I think all that is behind us now. So I think the third quarter will be definitely much better. Overall, I think we should end this financial year with around 8 to 9% kind of an earnings growth. So the last quarter was absolutely flat, which means this quarter definitely will be much better, and we should end the year around 8-9% earnings growth.
8 to 9% earnings growth. There's an HSBC note out this morning which puts Nifty returns at close to 5%. Aniruddha, what are you penciling in for the Nifty? And at a time when the whole mood has changed. For the last couple of years, you could perhaps just ride the Nifty and then you'd be fine. It's become a tougher gig right now. But how are you looking at, what the key indices performance will be?
No, I think, I will answer this question in a slightly different way, because, being portfolio managers, we used to always have this issue that, people used to say that, it's very difficult to beat the index. But I think now it's become much easier to beat the Nifty, because for a simple reason that there are pockets of earnings which are happening in the market, and which might not always have the representation in the Nifty. So I think if I look at the valuation for Nifty, I think it's not expensive. So I'm not too concerned about the valuation at this point of time, which I was concerned 6 months back, because if I look on FY26, I think broadly we should do around 1200 rupees EPS on FY26, where Nifty stands today at around 23,600. I think we are at around 19.5 times FY26, which is not expensive. We used to talk about 1 year forward, 24, 25, which was expensive. So I think where we stand today, we are very close to the historic average. So from here, any earnings positivity in the in the third and the fourth quarter will be kind of good signs for the Nifty upgrades also to come from different houses. But as I said, I think there is definitely opportunity beyond the Nifty, and there will be pockets of opportunity in the market.
These pockets of opportunity, Aniruddha, I'm just wondering what you're finding exciting, because through the last few days, and I would say a couple of weeks, I'm getting mixed reviews on things like, for example, financials, private banks and HDFC, etc. Let's start with that. What do you think of the financials, and would you say that this is a pocket of opportunity in the next 12 months?
See, within the banking and the financial, I'm more positive on other financial services which are exposed to the equity market, something like asset management company, wealth management, platform businesses. I think that is where you'll see earnings in the range of 25 to 30%, which hands down beats the banks with regard to the earnings growth, which one can see. So I would be more bullish on other financial services than the banks. Banks, I have been underweight for a long time, and I would say that that has helped in a long way. But yes, I would say valuations are attractive in the banks, but earnings growth is yet to pick up for a simple reason that with many of the larger banks having issues on the LDR, we have seen what happened in the recent business update, that deposit growth has been there, but the lending growth is extremely weak, which is kind of giving you a concern that there will be a pressure on the NIMs, because if all the banks have to run for deposits, definitely the deposit rates have to remain firm. So I think banks, I'm not too bullish. I would remain underweight on the banks, but I'm more bullish on other financials.
Okay, so do capital market plays come into that, Aniruddha? Because we know that this quarter, especially maybe for the broking companies, might be a bit tough, right? Because of the lower volumes, or maybe the year could be a bit tough on a YY earnings basis. So what within the other financials? Is it capital market plays? Is it something else?
Yeah, so basically other financials, it's all about the capital market play, which includes your broking slash wealth. So I'm betting more on firms which have a blend of both broking and the wealth management business. I'm also very bullish on asset management, because I think asset management business, they have the benefits of both the fresh inflows which keep on happening, along with that the organic growth in your existing AUM. So I think it's a kind of definitely one good space to bet on, because yes, it's not just a short-term play. I've been bullish on asset management space for a long time, for a simple reason that if we are talking about equity culture in the country to grow, I think this is one space which becomes a direct beneficiary of that. So asset management, broking slash wealth management, platform businesses like exchanges. We have only one exchange which is listed, the BSE, but I think exchange and other platform businesses like, which provide the services to different asset management companies, these are all good areas to bet on. And there I think getting 25 to 30% kind of an earnings growth is not very difficult.
What about IT? IT in flavor, and for the next couple of days at least will be. Are you feeling that there could be a change coming in for IT companies, and post the takeover of the Trump administration, there is a further upside? Were you satisfied, or were you comforted by what you saw coming out of Accenture?
So IT, it keeps giving you those mixed kind of outlook always. There's always driven by the news. Something happens in the US and all of a sudden you see the outlook changing. Accenture does a business upgrade. We see all the stocks up 8-10%. Then it does some job cuts. We see them down. So I would say IT continues to be not a very, very exciting space right now. But yes, I'm not negative on it. I would say I would wait and watch how things pan out, because see, I'm not too concerned about Mr. Trump coming in the power over there, because I think earlier the concern used to be about H-1B visa impact on Indian IT companies. I think if you see the recent comments of Mr. Elon Musk, he has been very vocal in support of H-1B visa continuing in the US. So I think, and all the more Indian IT companies have a good presence in the US itself. So it's not that, we are just focusing on H-1B visa. Having said that, if economic wise US and Europe does well, I think it's good for Indian IT companies. So overall, I'm not negative. I'm kind of on the edge with regard to whether to increase IT or not. From not having any IT around 6-8 months back, I have some IT exposure in my portfolios as of now, but yes, I'm underweight as of now. But I would wait and watch how things pan out. In the evening, we have the numbers from TCS, so I think we'll get an idea how things are going to happen.
Underweight IT right now, I would say in the BFSI space, you prefer the ones with capital markets exposure. How are you feeling about autos, or which is that one area? Let me leave it to you actually and keep it a little open-ended. What is that one area that you see the most upside in the next 12 months?
So I would say the biggest upside I'm seeing is the whole industrials and the capex space, because I think this industrials and capex is one area where, as I mentioned, at least 6 to 8 months of the last calendar year was impacted because of, the elections in the center as well as the different states. But I think with all those capex plans which are there, and I think government is pushing for infra execution, I think this whole industrials and capex is going to be a big opportunity in this calendar year. Having said that, within that, one bucket which I'm very bullish is the whole energy and the power space, because power is something which I think India is very hungry. The amount of capex which we are seeing in the country on the power space, I think we have not seen that for a long time. And within the power space, I'm betting on the entire value chain of power, from power EPC, power transmission, the wires and cables, transformer companies. So I think this entire value chain of power is what is going to benefit in a big way. So I think this is definitely a good opportunity. Valuations are also not very expensive across most of these companies. So I think this is one good space where investors should have a look at.
Okay, thank you so much, Aniruddha. Always a pleasure to chat with you, Aniruddha Sarkar there. And sounding more optimistic than a whole host of people that we've spoken to in the last few days. So that's always good to hear.